All right, 2023. It might be an interesting year for the precious metals. Might be. Hello, everyone, and welcome back. Once again, this is Clean Money. Thanks for tuning in, guys. Got a good show for you today. Lots of information. I want to give it to you as quick as I can, as fast as I can. That way you can make a decision based off of your instincts, all right? So going forward in 2023, we got a lot of stuff to talk about. It's going to be a long year, I'm thinking. Mr. Jerome Powell came out last week and he essentially killed the Santa rally that was taking place and put everybody in their place. It turns out that everybody got excited when Jerome Powell pretty much came out and said that a couple weeks ago that they weren't going to raise interest rates 75 basis points without saying so. So he come out last week and he essentially told us all 50 basis points. So everybody started, cracking the champagne bottles and cheering and dunking and saying, "Oh, it's the printer's getting warmed up, and here we go again. It's time to rally." And no, sir. He essentially said that this is going to be an ongoing issue going into 2023, 2024. So, which is a good thing. It gives us time to accumulate more assets. That's the way I look at it. It gives me more time to accumulate stocks. It gives me more time to accumulate gold and silver. It gives me more time to stack more cash. It gives me more time to do what I need to do to set me up, because what's taking place right now, guys, it hasn't happened in over 40 years. So let's break it down, all right? First thing I want to talk about is the federal funds rate, right? I know you've seen this chart. I'm putting it up right here. But a lot of people, they seem to leave off this very last part of this chart because it doesn't fit their narrative. But I want to give you the entire narrative, okay? So what you're looking at here is you're looking at the federal funds rate all the way back to the 50s, all right? So ever since 1980, which was 40 years ago, right? It's the last time inflation was this high. You had a huge spike in interest rates. So we haven't seen anything like that this time. So what you have is you have lower highs year over year over year over year, all right? So right at the very end of this chart right here, you look right there at 2020. Look to the right of that. What do you see? You see a reversal, okay? You see a change of the trend, all right? That's important, okay? That's a long-term trend that we just broke. And what's going to take place over the next year is going to be vital, right? So how you invest off of this just one little chart right here. This should wake you up right here. So the next one I want to go into, this is the 10-year treasury minus the 2-year treasury, right? This is the one that you need to know about. This is the big one, okay? It's not the end-all be-all, but it's a huge indicator, okay? It goes back all the way back to the 70s, all right? 40 years, right? We have to look back this far because that's the last time inflation has been this high. All right, so if you look, every time it falls below zero, what takes place? You see a gray bar, right? That gray bar is a recession. Each and every time it has dropped below zero, we essentially were already in a recession. It just wasn't recorded until a little bit later. All right, so if you look, we only touched it, right, in 2020, right? We only touched it, and we still got a little small, minute recession. Now, if you look right now, we're well below where we were in 2007 and 2008, and we all know just how bad the Great Recession really was. So if you think that you haven't seen layoffs, foreclosures, the whole 9 yards, we have not seen any of that yet. What you do now, okay, is gonna set you up in the long run, okay? So it's important to have this information and to not fight the Fed. Okay? He's laying out his game plan, right? He's telling you that the federal funds rate is essentially going to go at least, unless he does do a pivot, right? Unless everything just collapses, right? We're not going to see a changing of the guard. We're not going to see that. All right? He's not going to change course. This is what's going to take place and how you invest, what you buy right now in 2023 and going forward. It's going to set you up over the next 10, 20 plus years. All right? So it's important to understand where to put your money, where not to put your money. There are alternative ways of investing. I want to talk about one of those today. It's one of the ways I feel that I'm going to benefit. Because number one, what are we having? What's taking place, right? Overseas, Russia. What's taking place with Russia? Russia controls pretty much a lot of the commodities. There's no question about it. They're a huge oil producer. They're a huge consumer of gold, right? They're buying up all the gold. They're actually trying to trade oil for gold. They're trying to base it off per gram. So I'm not going to dive too much into that. But another thing that we have to import here that we can't do here, we can't do it here, is uranium. Now, this portion of the video is sponsored, and I want to talk to you about it because we don't produce any uranium, but we consume a lot of it. All right, 20% of our energy is nuclear. Now, where do we get most of our uranium from? We actually get it from Russia. And just as you're thinking, right? Just as you're thinking, it's a big deal, all right? Big deal. So let's dive into the info. Now, this has first mover advantage. And what that means is it's the first company of its kind to actually start operating like this in the United States. Now, this is bipartisan, right? So you have support with Republicans and Democrats in starting this from scratch. They're investing billions into this industry. Not only that, but they've also built a brand new nuclear power plant right here in the state of Georgia. And we're going to be heavily involved in consuming some of this sector. Now, one of the key indicators that you guys are most interested in, or should be most interested in, is the price target. Now, it has a price target of $5.70 a share. Now, right now, it's trading at half of that. So, right now, you can get in at a huge discount. And not only that, but it's trading at almost a 1-year low, and it just keeps bouncing off of this resistant level that it's at right now. Now, if it drops below this, then it's a steal. Absolutely, it's a steal. But right now, it is holding support, and it's something that is very advantageous. It's very important, right? Because once you break that support, you have to find somewhere else where it's going to drop to. UROY, right? They announced that it has notified Uranium Canada that it plans to receive royalty proceeds from its recently restarted world-class McArthur River mine through delivery of physical uranium. So that's huge, right? McArthur River project, which is operated by Cameco currently plans to produce 15 million pounds per year from the operations starting in 2024. So, like I said, what you do in 2023 is going to set you up in 2024 going forward. Scott Melby, who is the CEO of URC, stated that by electing to receive physical uranium under this royalty interest, URC provides shareholders with unhedged exposure to future uranium price upside. In addition, it represents pounds sourced from geopolitically stable jurisdiction in one of the world's premier uranium mining districts by an operator with an outstanding and safety environmental record. The Dawn Lake project, while early stages, covers multiple areas of significant uranium mineralization and its resources at the Tamarack deposit, as well as the historically mineralized areas of Dawn Lake. This project also potentially covers the immediate strike extension of ISO Energy Limited's Hurricane deposit. So the restart of McArthur project, or McArthur River project, That's huge. All right. It's going to be one more revenue stream that this company is going to be able to put on its balance sheet. All right. So as they grow more royalties, they are going to produce more and more cash, which is going to make them more and more valuable, which makes your investment that much better. It doesn't come without risk, guys. Miners, they're risky. All right. Not all of them pan out, but ones that I have found in my experience, the ones that are royalties, they actually perform a lot better versus non-royalty companies. So this is one that I like. I've invested in UEC before. I've done well with that. I've since closed that position. And then after this video, and then going into 2023, this is one that I'm personally going to add to my portfolio. Now, I want to see what's going to take place here in January because, like I said, the Fed has moved the playing field, right? So stretched out his time frame a little bit more, trying to get to that federal funds rate of 5.1. So going forward, if tensions in Russia clear up, obviously this is going to have an effect. But nevertheless, the United States does not want to depend on Russia for its energy consumption, oil, or anything else, right? So this makes this a solid play here in the United States. And that's going to do it for today, guys. I appreciate you guys watching the video and having an open mind. Don't forget, keep grinding on your stack.